Bitcoin went from a cypherpunk experiment to Wall Street's newest obsession. And now even the OGs are wearing suits. In this fascinating conversation, Adam Back explains why institutional adoption may still be in the early innings.
Institutional adoption is still early. The actual allocation to these model portfolios, I think, is yet to come, so there may be a tailwind ahead of us yet.
Why Bitcoin's core value is still widely misunderstood, and why quantum computing could become crypto's next major challenge.
When there is a security factor, then things are dealt with in a more pragmatic way, and there aren't that many choices actually.
Back breaks down ETFs, BlackRock allocations, stablecoins, self-custody, DeFi collapses, and why he believes many crypto yield models are fundamentally flawed.
In a lot of ways, these systems are like fiat, right? There's money printing underneath it all. Like where does the yield from staking come from? It comes from airdrops and ICOs, and so effectively it's privatized seigniorage.
He also reveals what Blockstream is building behind the scenes, from next-gen hardware wallets to post-quantum security upgrades designed to protect Bitcoin for decades. Along the way, he shares sharp takes on staking, rehypothecation, AI-powered hacks, and why Bitcoin's simplicity may ultimately be its greatest strength. Let's go.
Let's go.
You know that Bitcoin's come a long way when you're dressing up now.
Yeah.
Last time we talked, we were baseball hats. Now we're guys in suits.
Right.
I mean, I think it's interesting to see how far Bitcoin has come. I would love to just start at the beginning. I mean, maybe talking about what it was like, how you handicapped the odds that we would actually look like this down the road, and where we've landed.
Yeah. I mean, it's Bitcoin came from I guess, well, I mean, early days of community project, right, with probably a profile of the earliest users were technical guys interested in technology, probably, right? As the meme goes, we're here for the tech, right?
Yeah. Are we still?
Well, I mean, I think a lot of people are here for the asset class or for the use case, right? The inflation resistant, hard asset, censorship resistant, the bearer, unseizability, all these things. Yeah.
Yeah, so seeing it now, obviously, in institutional wrappers and somewhat eating the world, do you have any, I'm sure you have two minds. One is the only way that Bitcoin becomes a global reserve currency is it has to go through Wall Street and institutions and through governments. But seeing it actually happen, are there any concerns that you have during the process?
Well, no, I mean, I think the way I look at it is it's a form of access, right? So for a lot of people, the way that they interact with investments is through a broker or a financial advisor. And so until Bitcoin was available in the spot ETFs and things like that, it was kind of hard for them to get access to it. And also, it's a question of tax efficiency sometimes, right? So in some countries, it wasn't possible to put Bitcoin in a tax-efficient savings, retirement savings plan, something like that. And so the advent of the ETFs and UCITS and things like that enables it. So I think it's accessibility. And then I think the next stage is, the institutional adoption where professional money managers will put Bitcoin into a mutual fund or a pension fund, because for a lot of people, the average person is not self-directed investments. They're not making investment decisions. So maybe the only way that they get access to Bitcoin, economically at least, is through the institutional adoption in managed assets. And of course, most of the money in the world is actually professionally managed, right? So that's the way it goes.
That's interesting because you talk about why people were there in the early days. It certainly wasn't to have Bitcoin as 5% of the portfolio because it improved your Sharpe ratio, right? So it's kind of interesting to see where, I'm not saying that it's a bad thing, by the way. I think anything that brings people into Bitcoin is great, but I can't imagine that you were thinking about that.
Well, I mean, the cypherpunks were generally what they would call anarcho-capitalists, so radical free market thinkers, right? And so they were actually, not that many people are interested in capital markets who are interested in Bitcoin, but capital markets are a large part of what drives the economy. drives the standard of living, the human progress, development of, the capital formation to produce products and services. So a huge part of the progress of the world, for the last 100 years, 150 years. So I think for people with that mindset, that Bitcoin does fit into the capital markets, and capital markets and companies organized by shares and IPOs and things are useful and positive things in the world, right? So but I think with Bitcoin, for a lot of people, it's their first experience investing in shares or in an IPO. So a lot of people will say, pardon the French, anything that's not Bitcoin's a shitcoin, whether that's a dollar or a euro or an IPO or shares in a company that manufactures something. But, ultimately, the stock market is a big part of the global economy, right?
I've got to imagine those people are becoming a bit more few and far between, though, right? You don't
Well,
get many new people coming in that think that way, or it takes a while for them to go down that
I
path.
mean, we have the different makeup of investors coming in. A lot of the ETF holders presumably are people that are reallocating within a share portfolio, either directly, self-directed, or via their advisor on request. And I guess over the midterm, with the model portfolio recommendations from BlackRock, Bank of America, Merrill, and Morgan Stanley, and so on, that once that takes action, then they will start to get exposure without self-selecting, just as part of a managed fund, which is, I think, still to come.
Do you think that any of these people that come in as investors and just, for the money, do you think that many of them will find their way to the original ethos of Bitcoin?
Yeah, I mean, I think people get interested in Bitcoin for a lot of different reasons. So I think, you got the technologists, people who stumbled across it, or they walked into a coffee shop and you got to pay in Bitcoin, which is the case in a few places. Or they were debanked, like unrelated to Bitcoin, or trying to use something in industry that's gray market, like they're poker players, and it's, the poker sites got cut off from other forms of payment at times, right? So some poker players that came in for that reason. But, for whatever reason they come in, or the route they come in through, I think Bitcoin is, it's has its own theme, and people will, learn about it, get fascinated, and then they get down the Bitcoin rabbit hole, and they really get into, the bearer nature of it. And in some cases, they start through a different avenue, but end up, setting up a hardware wallet and putting some Bitcoin in it that way as well.
Do you find some irony in the fact that stablecoins have become so incredibly popular, being that obviously Bitcoin was somewhat created as a hedge against the dollar, and one of the killer use cases of the technology obviously has been hyper-dollarization?
Right. I mean, it's of course, the stablecoins collectively have more dollars than some major currencies, major countries in terms of foreign cash reserves, right? But now, ironically, the earlier electronic cash systems like DigiCash was actually a very private stablecoin. So one of the innovations of Bitcoin itself was that it had, what people were trying to work out how to do after DigiCash failed was how to make it how to make an electronic cash system decentralized. And so there were attempts to figure that out going back to the mid-90s, including, the proposals like B-Money, Bitgold, and later Hal-Finney's OPAL, and finally Bitcoin, which ultimately start using proof of work in the design, maybe not specifically to create a hard money, but because a peer-to-peer protocol can't open a bank account, basically. So it was a sort of technical solution to that. Now, he was speculating as to people's motivations for doing that, and some of the cypherpunks were interested in hard money and gold and things like that. But yeah, so effectively, for whatever reason, Bitcoin is both the bare electronic cash and the hard money, which makes it more investable and more attractive, and got adoption much faster than, let's say, something like DigiCash likely would have. If cryptocurrency started with a private, relatively unseizable stablecoin, it's a different thing, right? If you can't invest in it, and investment and speculation is another adoption driver.
Let's talk about Blockstream. So now in this new world where Bitcoin has become institutionalized, has become, I think, universally known, how do you adjust your business and start to create things that exist in that bridge between sort of retail and institutions and as you're building? Because I know that it seems like you've had to shift.
Yes, I mean, we're still, accelerating in the consumer space. We announced during the Vegas conference a few weeks ago the Jade Core, which is a new entry in the lineup of consumer hardware wallets. And the previous year, we announced also at the Vegas Bitcoin conference, entering kind of enterprise wallet space, so more role-based access control, and entering the technology space like HSMs and the technology that custodians use ultimately. So, we're an infrastructure company, and we're here to provide technology for different entrants, and there are new entrants here. And of course, with the traditional finance world, typically their interface to assets is through custodians. And so providing technology for custodians is a good way to, interact with Bitcoin, with stablecoins, with tokenized securities and things like that.
In your mind, what is still missing from wallets to keep people from self-custodying? I still think we're at the point where grandma can't necessarily use it, to use sort of the old meme, right? The private keys are complicated, they're scary, and
Right.
people don't know how to transact. So, what are you building into the future to make those universally usable?
Yeah, I mean, just continuing to iterate on usability. The Jade Core that we released last week comes with some improved usability, improved user interfaces, and support for a companion app from Blockstream, but also companion apps or wallets on the mobile and desktop from a number of software vendors.
And what else is Blockstream working on?
So we've always been quite active in Bitcoin protocol space. So we did a lot of the work on Taproot and Schnorr, quite big in cryptography and security. And so our research team since earlier last year has been working on the post-quantum question. And so we were well placed to bring out some of the first concrete proposals of how to do the post-quantum signatures. So the concrete proposal with shrinks and then shrimps, which brings the size of a signature down to a manageable level where that can be practical, and also in a framework of doing it within Taproot, so that you can continue to spend using compact Schnorr signatures today, but you add the option to be able to spend using a post-quantum secure signature like shrinks in the future, if and when the post-quantum computers get powerful enough to be a concern.
Do you view these as initial proposals for solutions or final proposals for the solution? Do you think that with more time and more information, perhaps the solutions will evolve as well?
Well, I do think that there's an interesting situation, which is the post-quantum signature research is relatively early stage. And so, there's been a NIST, National Institute of Standards and Technology, publishes cryptography standards for classical cryptography. And after a multi-year design process with submissions from international cryptographers, they issued a hash-based signature scheme called SLH DSA as a NIST standard October 2024. So it's relatively recent. But they're also, active research in more compact and flexible signatures. Unfortunately, it's premature, in my view, to, have them be standardized or for Bitcoin consider using them. So I think what could happen actually is that, the advantage of those is they may be more convenient, smaller, faster, more flexible, but they're not ready today. And so I think the convenient thing to do is to have an option to use the shrink signature, once there's agreement about how to do that, today, and then as the post-quantum signature research improves in the next 5 or 10 years, to have a second, possibly better post-quantum signature, because we can't really, it's not a conservative thing to do to just wait for that to converge, right? So you may actually end up having a post-quantum signature scheme that generally never got used.
Right.
It got upgraded before the quantum computers arrived, for example, right? But I think that's fine. It's all about mitigating the long-tail risk.
How confident are you that the Bitcoin community can come together to actually find a solution? It's interesting because many will say, but the most powerful thing about Bitcoin is arguably the decentralization. There's no single founder. But when it comes to making a decision on how to deal with something like quantum, it becomes much more difficult because it's decentralized and there's no single,
Right.
entity that can make that decision.
Yeah, I mean, I think that when there are changes that are optional, like they don't impact security, where there are many design choices, so say something like covenants,
Right.
then the conversation can take a long time because there are multiple competing covenant proposals. They're somewhat similar. The trade-offs are subtle. It's very specialized, so not many people understand and can look at the programming differences of them. But, when there is a security factor, then things are dealt with in a more pragmatic way. And there aren't that many choices, actually, to my mind, because the other signature scheme that was proposed by NIST or that are available are harder to get confidence in. So the optimized NIST scheme, so the shrinks is an optimized version of that. But the NIST scheme dates back to a 1979 paper by Leslie Lamport, the same academic researcher who proposed the Byzantine generals problem. In fact, he's a busy guy, right?
Yeah.
So anyway, that signature's been around for so long that people had a lot of confidence, a lot of it's a very safe and simple type of signature. So I think that is a good conservative choice, and there aren't many other options really. So it's just around the the optimization parameters and to see if there's support for that. But so far we've put out a paper. Other people have looked at similar things. I think that's the most probable choice. And of course, it takes a few years for Bitcoin to work out the details, of the BIPs and things like that.
So it's good that we're talking about it now.
Yep.
Interestingly, I mean, I was one of the dismissive of quantum people years ago. People would talk about it and I would make the flippant jokes about the nuclear codes and the banking system and all those things, which I do think are still true. But it seems like in the last 6 months, even the people who kind of dismissed it have said it's serious enough that we have to talk about it just in case. And then there's a lot of people who are fully sounding the alarm.
Well, I mean, I think it's probably premature to sound the alarm because the current crop of hardware, the state of the art is to factorize the number 15 while kind of cheating because there's no error correction. So really, it's below the power of a calculator from 50 years ago, or an abacus or a mechanical calculator even, right? But there is something most likely there in the physics. It may eventually be possible to make something scalable that does become problematic for cryptography, and so there's used in live systems. And so I think rather than getting stuck arguing about the timeline and the rate of progress, the simple thing to do is be ready for it, and then we don't have to hear about quantum advancements in the news all the time. Now, of course, the people doing the research, they have to raise a lot of money to do this kind of fundamental physics research that has been going on for 25 years, actually, right, with very slow progress. So it's got to be tough to raise money for that. And some of it's sponsored by very large companies with a research budget, but there are also startups and public companies. So I think basically what you're looking at is they found the way to get the most marketing bang for the buck is to add Bitcoin to the conversation and say, well, it could be threatening to Bitcoin. So I think most probably, not this decade, let's say, or maybe not even
you definitely don't buy into the Google 2029 paper.
No, I don't really. But, I think ultimately it doesn't really matter because, people care about the long tail risk, the fiduciaries, the custodians, the ETF operators. They are, professional money managers or asset managers with a fiduciary obligation have to consider the tail risks too, right? And so it's hard to quantify what's the tail risk. Is a tail risk 1%? Does something could happen in a decade, or is it 0.1%? They still want to consider it. And so the way to consider it is to have an upgrade path and upgrade, right?
What's the worst case scenario? I mean, it's that the tokens become unlocked and sold, right? I mean, that's really the worst case scenario.
Well, I mean,
Millions of
yeah.
tokens hacked and put on the market at the same time.
I mean, I think some of the thinking about it is a little bit simplistic in the sense that they look at the system. There's the phrase that Bitcoin is anti-fragile, right? And so, but ultimately the anti-fragility comes from all of the activists, investors, and technologists looking at it. So if something, black swan, sort of lightning strike, one in a million weird thing happens, they have this kind of game that, well, in the game of chess, the person's just not going to move their piece out of the way. Of course, they're going to react, right? And there are lots of things you can do to react, even if they are reactive. You can generally address things. So now in practice, I think there's probably plenty of time to do something. And, as I say, we've been working on it for a couple of years now and some of others. So it's not, not that nothing is being done. It's just that it gets a lot more media attention to talk about, long-term research that is basically negative news sells, right? So we didn't get much output for
Fear.
saying, oh, we're working on, here's a massive survey paper that took us 6 months to write. Nobody noticed, right? Oh, here's shrinks. It's a candidate. A few technical people noticed.
Yeah.
But, a big company said their marketing department got busy with an incremental improvement in an algorithm or in some hardware. And it's all over the news, right? So that's what you're looking at.
I mean, you get a name like Google, you put a year 2029, and all of a sudden it's a huge narrative. I mean, it makes sense.
Right.
Yeah.
Yep.
Pretty wild. Does AI concern you at all in that arena? Could it accelerate quantum in any way, or any other threats to Bitcoin?
Well, I mean, only in a sense of being a kind of new analog of computer-aided design or computer-aided algebra, right? That you can use it to help researchers organize or automate certain lines of inquiry. But I think ultimately it doesn't change the fundamentally hard mathematical problems that all of these systems rely on.
Outside of Bitcoin, there's been a lot of problems of late.
They have.
Curious your opinion on all of the DeFi hacks and Lazarus Group's activities and the new novel ways that they're finding ways to hack DeFi that are not necessarily even code and smart contract, but social engineering and utilizing AI. Do any of those attack vectors? It seems like Bitcoin's been predictably immune to most of it.
Right. I mean, we never like to say told you so, but the VM-based smart contracting, I think, is just too complicated to secure. There's a phrase, KISS, keep it simple, stupid, which is, if it's simple and robust and does one thing, it's much easier to secure something. But if, you put a general VM into there, it becomes very hard to secure. And that's been the problem over the last decade, really. There's been a kind of ongoing smart contract compromise over the years. And I think the AIs are, helping the attackers because they can more systematically explore the weak points and, help find them. So, and of course, people have seen the reports that basically with staking and liquid restaking, there's a lot of contagion between the protocols. So all it takes is one element in that chain to have a problem. Which
nobody seemed to have seen that until 2 weeks ago.
Yeah. Well, I mean, it is a common pattern in finance that people build up excesses of leverage on what they think is a sure thing. And then you have a long-term capital management event where, something wobbles and a lot of things blow up.
Yeah, it turns out rehypothecation is bad.
Yeah. Yeah. Well, I mean, in a lot of ways, these systems are like fiat, right? There's money printing underneath it all. Like where does the yield from the staking come from? It comes from airdrops and ICOs. And so effectively it's privatized seigniorage, so it's sort of, Bitcoin doesn't have that economic effect because it's hard money. The only way to get it is to mine it or buy it, right? So I think that's part of the picture ultimately.
Do you think that the world is taking notice and that it will largely funnel back to Bitcoin? I mean, the capital flight from DeFi is astounding in this period. I think a lot's coming back, but...
Yeah, well, I mean, presumably people will want to have some confidence that it's not just going to happen again, right?
It is. It is going to happen again, though. There's no way it won't.
Yeah, I mean, I don't touch that stuff myself, so I think, the conservative thing to do always is buy Bitcoin and cold store it, or, go for a reputable custodian or a big ETF, something like that. And there are a number of good providers in the market. So, yeah, I mean, it's a speculative type of thing to do, right? To apply that kind of leverage and take stakes in effectively airdrops that are providing a staking yield, right?
Yeah. None of it makes much sense to me. And listen, I'm not dismissive of any of it, but it seems like if you're taking yield and taking something out to earn more yield, but you take out to earn more yield, like that's a tale as old as time. That's literally never ended well at any point in history.
I mean, it's an intense amount of leverage, which probably hasn't really been quantified, and a lot of contagion risk, right? And here we are.
Before I let you go, I think we got 2 minutes. What are you most excited about right now?
Well, I think it's a really good time for Bitcoin, more open for business environment, the kind of retail technology, the hardware wallets, the smartphones, the new layer 2s, and actually some surprising innovation at layer 1. We're finding some surprising ways to squeeze extra interesting things out of layer 1 with BitVM and some of the new things there. And, I think of course, the price has recovered a little bit over the last month, since the 60K bottom. And the institutional adoption is still early. So, across about 30% of the BlackRock ETF is, by looking at the filings, seem to be institutional to some level. Probably some of it basis trading, of course.
Yeah.
But the actual allocation to these model portfolios, I think, is yet to come. So there may be a tailwind ahead of us yet.
I agree. Well, Adam, I don't want to take too much of your time. Thank you so much. It's always really an honor to speak with you.
Good to speak with you.
This podcast is sponsored by Weeks and was recorded live at Consensus 2026. You can find out more about what they have to offer by clicking on the link down below in the description. Thanks to Weeks for sponsoring.